FTX in the Bahamas in the US is going through a situation right now. I mean, not to comment on them specifically, but generally speaking, what do you think the implications would be on the state of the industry? I mean, there is a school of thought that it would be used as an impetus to greater regulation in the sector. What are your thoughts?
Yeah, I mean, what we have always been saying is this mantra: not your keys, not your crypto. So just think of the origins of Bitcoin, invented by the pseudonymous Satoshi Nakamoto at the height of the global financial crisis, where we did not trust banks, we did not trust these central counterparties, and we had this money that you hold yourself. You hold it on an address which is controlled by the corresponding private key. And now, since these times, since 2009 when Bitcoin started, you've had tons of people actually leaving their crypto with somebody else, leaving their crypto with mostly exchanges. It started off with Mt. Gox in 2014, and it has been going on every year. There have been exchanges or other custodians who went belly up and took customers' funds. There was, I mean, some of these cases are like really intriguing. Think of the Canadian case, Quadriga CX, this guy who did a trip, a vacation to India and suddenly died. Everything was
Netflix,
gone. There's a Netflix series, documentary on this story. So we've always been saying, hold your crypto yourself, self-sovereign. You hold it on your address. You have a hardware wallet and you store the crypto assets that you own. Otherwise, it's just sort of a promise by an exchange that they might honor or not honor, depending on their solvency. And I mean, in 2022, you said at the beginning it was what did you say? It was did you say disastrous or
disruptive?
Disruptive. Yeah, I was thinking, Darren is really rubbing it in here. I was feeling the pain myself. But anyway, so it was really a bad year, and it started off. I mean, we're in the midst of a bear winter since time immemorial, and then we had this Terra Luna, this Terra USD collapse, which had a ripple effect. And then you had, for example, Celsius, one of these basically banks, you can call them, not really being a bank, but basically a corporation. You send your crypto assets to an address of theirs, and they pay out juicy interest. Why can they do that? Because they engage in like super risky activities, which generate an even higher interest rate, so that they can basically keep a margin and pay off your interest. But Celsius went bankrupt, and people who had not heard of this mantra, not your keys, not your crypto, really should have understood it at that point in time. So if you have an account with FTX in May of 2022, actually that should have been the time you woke up and said, FTX is a super brand, and Sam Bankman-Fried seems to be a cool guy. I don't like his hairstyle, but he's making a ton of money, and so everything looks good, looks great. But nevertheless, let's be on the safe side and let's withdraw our crypto assets, because you only need them on an exchange if you're doing trading. So if you buy and sell the whole day, then of course the assets have to be on an address of the exchange. But if you're just using the exchange to buy, then you should. It's like a public toilet. You go in there, you do what you have to do, and then as fast as possible, you go out. You don't spend too much time there. Why would you sort of spend too much time there? Yeah? So it's exactly the same with these crypto exchanges. And you asked about regulation. Yeah. So I think this will come, and actually I'm very much in favor, because these companies are in favor of this regulation. There are other types of regulation I'm not so much in favor of. But these are basically central intermediaries holding assets. We have no insight. There's no transparency what they're doing. I mean, if you looked at the bankruptcy filing by this, I forgot his name, and spectacular things that we now learn about what was going on at FTX. But we did not have any insights into the company. They are kind of black box, and so regulation is really something that should exist here. So these centralized players, where there's a risk for consumers, they belong regulated. They should not be treated differently from a normal bank, where there's also certain regulation. You cannot commingle assets. You cannot pledge your customers' funds to take out loans to engage in speculation. So all of this is actually coming in Europe. It's called MiCA, Markets in Crypto Assets Regulation. And I think in the US, you have your 100th proposal in Congress. Is it the 200th? At some point, it will also come in the US, yeah?
Right. So it's not, so it's the exchange as well, but also the marketing is a key point, right? Because what has come out is, well, there's been a laundry list of so-called influencers in the social media space who receive money as they do for other products as well, but perhaps they found themselves promoting a product or service that they didn't fully understand themselves, and they weren't perfectly up to speed with the risk involved, and it's not just in crypto, but in the general financial services space.
So if you're a 6, 7, or 8-figure investor, entrepreneur, or business owner who needs a tailor-made solution from a qualified team of professionals, we can help you achieve the international lifestyle, the freedom, and even the tax savings you're looking for. Visit us at htj.tax and live that international life.